So the question that comes up is, can I actually trade the financial markets and make any money doing it? Can I find any success in doing something like that? Because I've heard these incredible claims about 95% failure rate, 75% failure rate. Most day traders lose money, all this kind of thing. So is it something I can really do, or is it just a scam? Is it a scam? All right, so Wall Street's not a scam. It's a real thing. First of all, no, it actually happens. Investing goes way, way back. I mean, it's even in it's a biblical concept. So investing is trading. There's nothing wrong with it, and it's completely legitimate. Trading the financial markets, whether you're trading stocks, commodities, futures, Forex, whatever it is that you're looking at doing or could possibly do, options, all of that stuff is viable. All of it's legit, and there are ways to make money trading all of it. So I hope that put some fears to rest here about, is it legit? Yes, it's legit. Can I do it successfully when that many people are failing? Yes, you can. How? How difficult is it? How is it possible I could do that when so many people fail? Well, let's start by putting things into context. I've been a small business owner for 28 years. It's estimated, here comes the key word, estimated, that 85% of all small businesses fail within the first 3 years. And that's what I've been doing full time for, almost 3 decades. How is that possible? All right. First off, it is estimated. And when they say failed, that too is just a judgment call. We don't know the full reasoning and gamut as to why people quit their profession. They close down their business, whatever it is. I used to have a brick and mortar at one time. There was a woman that had a shop a couple doors down, and after being there for a few years, she said, you know what, I'm going to close up. And I said, oh, really? She said, yeah, I'm pregnant, and I want to raise my child, and I don't want to be tied to having a store. And this was something that my husband got for me because I wanted to do something just for fun. So it wasn't like it was making a lot of money or anything. It was just something I did for fun. But now I'm having a child, so I'm gonna leave this. And I couldn't find anybody that wanted to buy it, so I'm just gonna close it. Totally legitimate reason to leave business. Had nothing to do with her abilities. Having the business had nothing to do about profit. So where do you categorize that? Somehow she would fall into this estimated number of businesses that failed. And where do you get these numbers from? Because think about all the people who start up a small business as a sole proprietor, meaning they use their social security number for their EIN or a TIN number, and then they do it for a year or two. You have no idea. They're not calling anybody to say, hey, I'm in business. That there's no record being kept, by anyone who's coming up and then saying, okay, well, 85% of all them fail. So you don't really know. And with trading, it's exactly the same way. You don't really know how many people fail. You could just say, well, maybe there's a lot of people that fail at it. But the reasoning they fail may be as widespread as you can imagine. A whole kaleidoscope of reasons, as to why they quit. Maybe they dip their toe in it, just like I have in many small businesses. I've tried different things and thought, no, this isn't for me. I could see the road, and I don't want to go down that road. That doesn't look like it would be fun. I don't think I'd enjoy it. So it wasn't me leaving those opportunities, Amazon, mail order, all the different build to suit stuff where all of the different options and opportunities that are out there. It's not as though I couldn't have done them and made them work. I just didn't want to. It didn't look like fun. I didn't think I would enjoy it. It wasn't for me. Trading's the same way. Just because you hear these numbers like 75%, 85, 95% of all traders fail, we don't know what failure really means. We don't really know what the real number is. And frankly, it doesn't really matter for that reason. It really doesn't, because we don't have any hard metrics. We don't have any hard reasons as to why people are going in, trying it for a while, and then leaving. All we have are numbers like 95% of all traders fail, and the average lifespan of a trader is 18 months. Okay, so then if you keep at it and you surpass 18 months, apparently you're ahead of some curve. You've eclipsed something where most people give up. They've waved the white flag. I'm done. I tried it. I lost a bunch of money, and this isn't what I want to do. Okay. But I don't believe that that's saying that 95% of the 100% of people that try this gave it their all. They gave it their best shot. This was all they could possibly do. They put everything into it they could possibly put into it, and they just couldn't make it. Come on. No, that's not what's happening. There are people out there that try it and they realize this isn't for them and they leave it. It's not as easy as they thought it was going to be, or the path looks like it's not going to be any fun. It's going to make them miserable. It's not for them, so they leave. It doesn't mean they couldn't have done it. It means they don't want to do it. And all of this stuff, you can't, just like small business, you can't measure yourself by other people's success or failures, what they're willing to do, and all of those things. You have to try this for yourself and see if it's something that you think this is something you would like to do. So the short answers are simply yes, you can be successful being a day trader. You can be successful doing this stuff over a long period of time. You absolutely can. And you just have to decide how you want to go about it, too. But you absolutely can do it. Now, some would say that the only way to go is to keep it very simple. Don't overcomplicate things. Don't put a bunch of indicators on your charts. Keep it simple. Others would say, no, you need to pay attention to the technicals and the fundamentals. That's the only way you're going to succeed. Here's my warning about that. As soon as you say you can't be successful at trading by doing this, but you have to do that and this, as soon as you start painting with a broad brush, you're immediately wrong. Because you can bet there's somebody out there, probably a lot of people out there, doing the exact opposite and still making money, still doing it successfully. So as soon as you say, oh, you can't trade naked charts and be successful, now don't say that. Because you can bet that there's somebody out there that's doing it and they're finding success doing it. In fact, a good portion of the models that I trade without any indicators on them. It's just a naked chart. And the rest of them just trade with one indicator. So don't say that you have to have all this, footprint data and volume. You got to read volume and you got to do this. You don't got to do anything, but you can. You absolutely can. There's nothing wrong with having a ton of data, a ton of indicators on your charts. You can do that. If that's what works for you, mission accomplished. It makes no difference how you approach it, because your end goal, your game is just to win. And if you're winning consistently, more than you're losing money, that is, because you can actually lose more frequently and still make money. That's a whole nother video. Then you've succeeded. It doesn't make any difference how you go about doing it. It really doesn't matter. You can trade very simple charts like I do, or you can trade very complicated with a lot of indicators and a lot of study and all of that. It makes no difference whatsoever. So long as you're successful with it, go for it. That's your style. That's the way you want to approach it. Do it. There's nothing wrong with that. There's absolutely nothing wrong with that. So this business of you have to do it a certain way is not true. It is not true. You can succeed both ways. Whatever way you use to work, that's success. You've gotten it. You win. How is it possible though? How is it possible you could have some people trading the markets with very little data and others trading with a lot of data? Both are successful and both are okay. Part of the reason for that is because I'll just give you an example, although this is just one part of the answer. Let's say, for instance, that I trade using moving average crossovers. So I use a 200 and a 20. And when the 20 crosses over the 200, to the upside, I take a long. And when it crosses over coming down, I take a short. And I found a way to make that successful. Okay. However, I've also been using the RSI as confirmation. So I have some kind of a confirmation indicator to help me out. So when that crossover happens, I need to see that the RSI is going up as well. Okay. Then there's another guy that also trades the same market, but he uses the RSI, but his RSI is actually the primary indicator. And then he uses average true range as his confirmation bias to give him, okay, we're good. Both are telling me the same thing. I'm going to take that trade. What's funny is you can have a dozen different people trading a dozen different indicators, and they're actually all trading the same move. Because let's face it, all the indicators are going to be doing the same thing, right? Well, they're all lagging. They're all a little bit behind. And when the market pivots and it starts going up, all the indicators are going to do what? They're going to swing up. So one guy's confirmation is another guy's primary. So of course they're going to agree. Hey, there's nothing wrong with that. Because again, all that really matters is you're making money. So what? So what if another guy's using volume profile? I'll give you an example. The trading system that I use right now, I just call it the V11, but it harkens to another trading system that I found after I had developed it and been using it, called the London Fakeout strategy. So the London Fakeout, the way it works is when the London market opens, because each market opens at different times. So when the London market opens, the Forex market, for instance, you'll see a volatility. You'll see volume come in because the market just opened. And the way this strategy, it's called the London Fakeout strategy, works is the market tends to go up, let's say, and then it reverses and goes down, or it tends to go down, reverses, and it goes up. And different people trade this fakeout strategy differently. Some of them look at it for opening range breakouts, for instance, and they'll look for a crossover and a continuation, confirmation, and they'll take the trade. Okay. Well, what I discovered was my trading system very closely mirrors that. Very closely. It's different. It doesn't look for breakouts. It just trades momentum. And that trading style, that trading strategy, the people that trade that, we are both trading the same move. I'm just getting in maybe at one candle earlier because of the way that my system works, or on the same candle they're getting in on. but we're trading it for different reasons, but we are trading the same move. So you can have, a variety of indicators in a different trading system. And yes, we're going to get different results between the two of us because of that. We're getting in slightly different areas, but we are trading the same move in the market. So does it really matter if one guy's, trading system requires these three things, or another guy's not trading any of those and he's just trading a naked chart? No, it doesn't really make any difference. As long as they're both profitable, who cares? So now can you begin to see why you can have 2 or 3 different people trading the exact same move with wildly different trading systems and indicators that they're using to identify where's the market headed and still be successful? You don't have to be an Ivy Leaguer. You don't have to have a master's degree in economics. You can trade the financial markets with success. You just need 2 key elements. You need a working strategy that has an edge in the market, and you need the discipline to trade it faithfully without deviation over a long period of time. Now there's elements that go into those 2 things, but essentially those are the 2 hurdles that you have to get over. With those 2 things accomplished, you can successfully trade consistently, make money over time. Yes, you're going to have losing weeks. Yes, you're going to have losing months. You may even have a losing year. But over the long haul, you can do this successfully and make money. And you don't have to be a super educated person to do it. I hope this has been helpful. I'll see you in the next one. Take care.